Hi, this is Randy Finney with Right Side of the Chart, and today's Monday, February 13th, 2017. Good trading week to everybody. Let's take a quick look at the charts, and I'll just show you a few of the things that stand out, some of the things that I'm watching. This video will be, by all means, will not be all inclusive. There's plenty out there that I'm watching, and I'll follow up with static posts, maybe some other videos throughout the week, any significant market developments or individual trade ideas. So what I wanted to do today is just start with a brief overview of the broad markets. I've covered these pretty extensively recently, so there's not really, I won't spend a lot of time, not a lot of new developments. The story remains the same. We have a series of negative divergences, consecutive divergences that warn of an impending trend change. The markets are moving up, and with volume diminishing, especially on the Qs. I've posted in the past, for those of you who followed the site before, I've put up charts that show when the Qs drop under a certain level of average volume. I have different indicators. That often precedes a correction, especially after an uptrend. This uptrend is seems to be waning. For the most part, the markets have moved around mostly sideways, slightly upwards in the SPY and the QQQ since early December, and IWM, as you know, has moved completely sideways in the last 2 months or so. So that's what we're looking at. And now, as far as an early sell signal, the major sell signal would be a break of this uptrend line on the 60-minute. This is a 60-minute chart, by the way, and that's what I'm going over. So I'm still watching this yellow trend line to give a pretty powerful, what I would probably refer to as a multi-week, at least multi-week swing trade signal on the broad markets. But until then, if you want to try to game a quick, and it's certainly a counter trend trade at this point, an early sell signal might be a break of this uptrend line, or it would be in my opinion, and take us down to any or all of these targets. So just from where we're at now, if we swung down to this first target here, it's about 229.75 or so. That's a drop of 0.71%. So if you're trading a leveraged instrument like ES, the E-minis, that's a pretty good move. And if this minor trend line breaks, I'd expect a move down to at least this uptrend line here. And then that, again, it hasn't been visited in a while, so to draw it out, my expectation would be something like this. Oh, sorry, wrong tool. A breakdown of that trend line, a move down to that first level, maybe a minor reaction there, maybe not. A reaction off this trend line, and then this is what I'll be watching for a longer term sell signal. And as I always say, trading the SPY, or you're trading the Qs or IWM mid caps, Dow, keep them all on your radar. And what I like about it right now, the charts are lining up that if we get a breakdown of that SPY minor uptrend line I just talked about, this is the QQQ 15-minute chart. This would be our next, or first sell signal, I should say, on the Qs is a break of this minor uptrend line. This one's pretty well defined, quite a few reactions going back to about the beginning of the month here, end of January. And so a break of that trend line, especially impulsive, a big red candle. You want to be a little on the safe side, wait for a 60-minute close, look for volume expansion, and that would take us down, in my opinion, to any or all. These are micro levels. If you can see, I have these shaded lines. They're really muted down a bit. That means minor resistance. So to draw that out, it would look something like this. Maybe move down, a little bounce here. This is our first significant, or I should say moderate resistance or support around 123.88 or somewhere around there. And then ultimately a move down to this T1/T3 area. Let me zoom back out and show you what I'm talking about. I mentioned this in last week's video, that I do expect a reversal in the Qs based on everything that I see in the charts, and I expect that to happen sooner than later. And my first primary swing target is right here where T1 and T2 come in. T1 is horizontal support around 121.62. You can see it right there. And T2 is this uptrend line that comes all the way back here to looks like November, so early November. So that's the story on the Qs. That's what I'm looking for. There's our first early sell signal. And if we get down to that level, just to try to put it in perspective, that's roughly a 4.5% or so drop on the Qs. So decent trade, even if you want to take a quick trade, cover there. But again, we don't have those sell signals yet. In this market, if it's taught us anything, it's to not jump the gun. It's been frustrating, especially here's the small caps. And we've traded in a very tight sideways range, as you can see, since the beginning, really since the beginning of early December here. The IWM, the small caps, have gone absolutely nowhere. This is an extremely tight trading range. These type of trading ranges don't last forever. Here's the top of your range right here, this resistance zone around roughly 139. Bottom of the range there around 133 or so. And based on my analysis of the QQQ, SPY, the large caps, and expecting a downside resolution of those patterns, obviously the IWM would most likely follow suit, and I think a likely swing target's all the way down here at about 125.80. Now to measure that out, that would be a drop of roughly 8.5% or so. So not a bad move, especially if you're trading a leveraged instrument. But again, take the leverage into account. And whatever you do, don't overdo it, especially if you're trading, those TZA, TNA, the 3-time leveraged, or TF, the E-mini futures for the Russell 2000. So there it is. That's my take on the broad markets. And a break of this support range would really help open up the door for a move down. The support level there is around 133.19. Call it 133 to be safe. And that's the broad markets. So now let's jump into a few trade ideas. A couple other things I'm watching. I'll just update some of the things that I'm bullish on lately. And this is an official long trade idea on the site. Wheat, I think I covered on Friday. Wheat hit our second price target already. I have to put an update. I haven't put an official post. I've been really behind on the trade ideas, including those that are stopped out. But I like it. Bearish or bullish falling wedge. Positive divergence, everything you like to see. Breakout, came back in, back tested support, took out that previous reaction high. So this opens a door for a move up to that next target there at 761. And again, most likely the long-term trade will be extended to this potential T4 level. So from the breakout, and again, this is an agricultural commodity, so it's not a rocket. You're not going to make a ton, nor will you lose a ton on something like wheat, but that'd be a 23% gain if and when it gets there from the breakout point. So that one looks good. And as I mentioned, if you want to spread your eggs around a little bit more, not have them all in one basket, but you do like the grains, JJG is a grain ETF. Similar story. Here's a breakout. We took out that previous reaction high, R2 resistance level, and there's the next target zone. What else is there? DBA even spread it around even more, so this has all different types of agricultural commodities in there. And somebody mentioned in the trading room today, cocoa. And we have CHOC, and I think the NIB is a more actively traded of the two if you want to use an ETF. Now, if you take a look here, let me turn the volume up a little bit so you can see this looks like very much like a selling climax. You see the volume bars relatively thin back here, and cocoa prices have just been in free fall. And there is potential divergence here. You see it a little bit better on, let me give you a chart that I'm following on spot cocoa. Okay, I'm able to fit most of this in here. The things that I'm watching, what it appears to me, and again, this is spot cocoa prices. This is on stock charts. I had to flip to a different, drag this over from another monitor. What we have here back in 2013, early 2013, and 2012, we have a couple lows that put a double bottom in. There was a nice rally. You can see a bearish rising wedge, a breakdown. Divergent low. These are the things that I look for. Let me change the color on these annotation tools. Okay, let's see. So you had this double bottom here. This one had a divergent low. You can see the bullish divergence in place. Rising wedge with divergent highs. On the bottom here is a MACD, and up top is the RSI. So you can see negative divergence there, bullish divergent low. These are the things I look for. I believe it's a simple yet effective trading strategy, and you have to be patient. There goes opening bell, so the market's now open. This chart, I don't have it turning on updates, so it's not going to change. And it's an end-of-day chart, by the way. Cocoa prices they give you the end-of-day price. So there it is, bullish, bearish rising wedge, correction, divergent high, all the things that I like to look for trend reversals. Now, where are we? We've come full circle here. We have what I refer to as potential negative divergence. It's not confirmed because you can see the MACD here. I'm using the MACD on this one. It's still pointed straight down, as is the RSI. However, we're coming off very deeply oversold levels here, and there's the PPO pointed down, or the MACD pointed down, and we're once again oversold. See, we're under the 30 level, and we have very steep, most importantly, very steep bullish divergence in place right here, potential divergence there. And what it appears to me, I often refer to things, I call this momentum fueled overshoots, a term I've made up just when you have such strong momentum leading into, whether it's upside momentum, a very strong run, and you have a powerful resistance level, it's not uncommon to see the stock shoot past that level. In this case, it's a downward, a waterfall sell-off. And so what I'm watching for, normally I would have expected this support level to hold, that 2050 area, those previous reaction lows, had we gotten there with a moderate sell-off. But instead we had a waterfall sell-off which sliced through. Now, that's bearish. You have to take it for what it is. As long as cocoa prices are trading below the 2050-ish level, slightly below that 2040 or so, that's bearish. However, if we snap back up in there, which is my expectation, and regain that level sometime soon, you can also see a very steep bearish bullish falling wedge that I've drawn here with the divergence. So that would be your buy signal. So maybe a big, strong, bullish engulfing candlestick or some type of bullish candlestick reversal pattern, and then a close, especially a weekly close back above that 2040, 2050 level. That would strengthen the case. We might have a short covering rally. We could have a V bottom, or cocoa prices may want to bottom out, but you could go long there with a stop below those recent lows, or even somewhere just below the 2040 level as a potential bottoming play. I mean, this again is cocoa. These are commodities. These have, there's a fungible, tangible value to commodities, unlike stocks, which can ultimately go bankrupt if things aren't well with the company. So there's always a certain a bottom in each and every commodity, and there's not a hard number. Oversold can become more oversold. Undervalued can become more undervalued. I don't know the dynamics, supply dynamics. Obviously, there must have been a glut of cocoa on the market right now, or something to that effect. But either way, one to watch. Okay, back to I just had a couple price alerts going off today. FCEL, this is one that we mentioned. I mentioned in the trading room, and I believe on the front page yesterday. There's that 160 target already hit and exceeded. So this is what I was going to get to it later, but that's the one I'm watching today. Props to, I think it was Drum and Drive in the trading room that pointed that one out, if I'm not mistaken. So thank you very much. I think that one, continue to watch this one this week as each of these micro levels go. I call these micro levels. You can see how well each one has acted as support or resistance for a brief period of time. So there's the first primary target, 160. And as we continue to see volume come into this stock, it's at 165 right now. I'm looking at another screen, and I think that opens the door to move up to that 184-ish level. So there's FCEL. Let's take a look at a couple other stocks. Things that I'm watching as far as longs. Dillards looks pretty good. We had a divergent low right here. You can see the bullish divergent low, a little minor downtrend line. So this is a potential bottoming play. Keep an eye on it. You can see the bullish or positive divergence. Macy's similar. You can see a divergent low, positive divergence. Prices making a lower low, while the MACD or PPO and RSI are making equal or higher lows. So there's one these potential targets were back from here. We had Macy's as a, if I'm not mistaken, a trade earlier in the year on a break of this bullish falling wedge, or at least a setup. So those targets were already hit. We've come back full circle, back down, made a new low. So those are potential longs. Short trade ideas, AZPN. Here's a back test, very well-defined downtrend line. This is a technology stock, software. So you could short here on the failure of this back test. Maybe a stop not too far above that recent high. Nvidia, I think it was Dazi in the trading room, shorted Nvidia on Friday and pointed out Nvidia looks pretty good. What we have here, a couple things I'm noticing on Nvidia is we had a top back here in late December. It looks like December 28th. A big bearish engulfing candlestick. Bearish engulfing candlestick is when you have a candlestick where stock prices exceed the highs, take out. In other words, this candle engulfs the previous day's candle. So at one point it traded higher than the previous day's highs, only to close well below the previous day's low. So that's what they call a bearish engulfing candlestick. It is a potential topping stick. So we had some downside. There was a correction afterwards. Prices moved back up, challenged those highs. So there's a couple things going on here. We've once again, on Friday, we put in another bearish engulfing candlestick. I should circle the previous days as well. You can see here that Friday's candle engulfed at least the previous 2 sessions, possibly the previous 3 sessions there. And what I told Dazi to watch for is follow through. If you see what you want to see with the bearish engulfing candlestick to help confirm or validate it, is follow through to the downside the next day, especially the next 2 trading sessions. So far today we are trading lower. The market's open now. And let's watch to see if we can close the day below Friday's low, especially more downside tomorrow. Now, that's one thing. In addition to that, we have a divergent high. You can see prices made a slightly higher high here. You can see the negative divergence on the PPO. You can see negative divergence on the RSI. You have a trend line. See this white trend line, fairly well defined. Really forms a bearish rising wedge pattern. So right now, as of now, we're breaking down below that. So there's about 3 bearish things that I'm looking at. A failure, roughly a double top high, bearish engulfing candlestick, trend line break, confirmed with negative divergence on a stock that's just gone parabolic in the last year or so. So there's a case, and not to mention an extremely high, P ratio around 60. So there's a little bit of a valuation issue going on with Nvidia, in my opinion. Okay, a couple more. And by the way, just on that targets, the patterns and everything I'm seeing here, I'm not looking at a quick pullback trade. Bearish engulfing candlesticks, double top highs, strong negative divergences, potential buying climax. You see the volume surge here. These are things that make a more lasting top. So I'm not looking for a pullback to this downtrend line or anything like that. I'd be looking at Nvidia for a drop of at least 25% in the coming months. So that one I think is especially if we get that confirmation today with a red close, you could short that one, put a stop just above last week's highs, last Friday's highs, and let it ride. So you have minimal downside, just a couple percentage points. Well, it's a pretty big day. That one moves quite a bit. That might be 5, 6, 7% downside. However, for once again 25 to possibly 40 or so percent downside. So it's all about risk and return. And if you think a 6 or 7% stop loss is too much, well, what you do is you downsize your position size. If you normally trade, $10,000 or $20,000 in a position, just short half of that, $5,000, $10,000, and therefore a 7 or 8% stop loss really comes down to being the same amount that you lose on a 3.5, 4% stop loss on a normal position. That's what I refer to as beta adjusting your position size. This guy moves. Nvidia, it's normal to see this stock up or down 3, 4, 5% in a day. So you have to adjust your position size accordingly. All right, a couple others to look at. What else do I have on here? I'll wrap it up with the ag commodities. Oh, before I do that, on a related note, the semis. Semis, as I continue to maintain, just look so ripe for a really nice correction. But again, we don't have that sell signal. They continue to wedge higher within the wedge. We took some, what I thought were legitimate, short entries early in the year. A couple of them actually played out for profitable trades or haven't been stopped out. But on balance, we were stopped out of more of those trades than were successful. However, nothing's changed in the charts. They've continued to wedge higher, and we need to see these trend lines. I have two alternate trend lines, the purple and the white one, but it's a beautiful bearish rising wedge pattern, and I expect good things to come on the short side in the semi stocks in the coming months. Just wait for that sell signal. That's all. IPI wrap up again. I like these ag, most things agricultural. That's where I'm looking at commodities in the ag commodities sector. Now, these are the fertilizer stocks, IPI. This one has been shared throughout, actually early in 2016. It's been a trade idea on and off, officially, unofficially. Right now, I believe it's unofficial trade idea. But the last time we recycled back in on a pullback to that 180 support, it was good for a nice bounce, or maybe it was a break over that level. I can't recall. I trade this one in and out. This is what I'm watching right now. This is a descending triangle pattern. So a break above that. These are inherently bullish patterns. They can break either way, so you have to respect a break down below 180. So maybe a stop somewhat below that, especially on a daily close below 180. Otherwise, look for a breakout above the top of the pattern as your next buy signal. You have resistance there around 259, so that could be an early target. But what we need to see IPI do is take out that previous reaction high right here. I'm referring to this candle on December 12th. That high was at 269, and that would open a door for a move up here to about the 353 level, which would be the next target, and possibly beyond. Again, it looks like these fertilizer stocks may have bottomed. Mosaic and Potash or a couple others. MOS, chart looks good. It has a large basing pattern that it did throughout most of 2016. You can see here, that's a base. So this makes a case for a longer term or a lasting bottom in the stock. It based for a year, traded sideways in this fairly large basing range, and recently has broken out and is moving higher. And this would be your next target zone up here. And beyond that, it may have more legs. We have to go out to a weekly chart to really look at. I don't have the targets marked up now, but let's just keep an eye on that one. And then Potash. And I also like these guys because they pay dividends. In a near zero rate environment, we've had a couple rate hikes since we went to the zero rate environment, but we're still earning virtually nothing on money market accounts, CDs, treasuries. So for your growth and income investors, these look good because they are, once again, potential bottoming plays. Potash has a little bit of work to do if you look at the chart, because if I look at that basing pattern, I would really say this is the basing pattern. And we had a couple brief attempts, but we failed to close above that level. So watch for a breakout of this range. And then next target on Potash would be all the way up there around 2220. And over time, again, if this one is pounding out a bottom, there's a lot of longer term potential. This one could move up to the low 30s without a problem, maybe even the upper 30s over time. So again, these are long-term trade ideas. All right, let's wrap it up there. And again, if I see any significant developments on the broad market or individual stocks, I will update those in a static post on the front page or within the trading room. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.